Hi, everyone. Welcome to those who are already tuning in. Leon here. Sorry, my camera is off. Let me quickly say hi. How's it, guys? Janita's going to be running our training today, so we're just going to give it a couple more minutes for folk to log in, and then we'll get going. So we're still just seeing the attendee numbers going up. So we'll get going in 30 seconds to a minute. Hope everybody's doing well this afternoon. It's the culmination of what I think and hope is a very good series, just getting everybody ready for ISO 540. And as you should be aware, today we'll be going and just having a look in our own working papers where and how we need to go and document everything. So Tarina has helped us fantastically with the theory. And so, Janita, I think I'll hand over to you and we can get cracking and start working through the working papers. Thanks.
Okay, cool. Thanks so much, Leon. Okay, good afternoon, ladies and gentlemen. My name is Anita, and I'm part of the RAC development team. We tried to assist you in building templates and guide you through the new ISO 540, but I would advise you to please make sure that you know and understand what ISO 540 entails, because it is quite detailed and there are a lot of new things in our RAC audit software. So please, you are going to get lost if you don't understand the basics. So while all of your clients are struggling to get their year-end figures ready, you can now print out ISO 540 or download it on your tablet, and then just make a lovely cup of coffee, put some your Irish cup of coffee, put some whiskey in, and then take your time and read through it and make sure you understand it, especially for your trainees that doesn't have that much experience. I think it's really crucial that they know what they are getting into. Okay, so I'm just going to share my screen. There we go. Okay, I hope everybody can see it. I see our attendees are stabilizing, so I'm going to kick off. Okay, so just from a bigger picture perspective, what Tarina did on Monday is she gave us a lot of theory and she took us through what ISO 540 entails on a theoretical basis. And then on Wednesday, she showed us 3 examples to bring the practical side and the theory together. Today, I would like to take you through what happened in RAC. Okay, so I'm going to start off with what changes were made to some existing working papers. So the ones that you all know and feel comfortable with in doing, I'm just going to show you what changed there. And then also we've implemented a new process. So you're going to populate some estimate programs and then to ultimately ensure that you audit the estimates within the ambit of ISO 540. Okay, so let's begin. Our first working paper that changed a little bit is 10.20, the identification of audit sections. Okay, it's not a major change. It's literally, you remember the column that we had here, where you now had to identify the estimates involved in a certain component on the financial statement. So for example, revenue, we had that fair value at initial recognition, and we had stage of completion. For example, the depreciation, we had the useful lives, residual values, all that jazz. So that column is no longer in 10.20. Please don't think your 10.20 is broken. It's just moved into a whole separate process to assist you to audit the estimates comfortably. Okay. So that's what happened on our 10.20. Then what also happened is in our 12.70, you remember that the old 12.70 was actually, it was a dual working paper. So firstly, you had the revenue, like it's here, where you need to say, okay, can or can't I rebut the presumption of revenue being a presumed significant risk based on ISO 240. So that is still here. But the tabs that you see are missing are the estimates work. You'll remember that we had to do 2 steps on estimates in this working paper. Firstly, evaluate the estimate for any possible indicators of management bias. And then we also had to do a retrospective review of the estimates to see whether it's in line with the prior year or have there been any changes in estimates that you need to now do further work on. So that has been taken out and put into our separate estimate program. Okay, so please, if you open this and you don't have an estimate sheet, don't worry. We've just built it into our new revised estimates process. Okay, a new working paper that we've created for you is this one over here, 12.80. This entails now all of your ISA 540 considerations per the revised standard. You'll see I love this working paper. We really try to take all of those detailed dumps included in the ISA and try to break it down into steps for you so that it's easy. You know, if you're at step 5, you're almost done with the estimate, but if you're on step 1, you still have a lot of work to do. Okay, cool. So just going to take you through these steps. And then we're going to do some work on the same examples that Tarina had in her Wednesday webinar. And I'll show you where we can plot in different applications, different assumptions, different considerations. So firstly, step 1, you'll have to complete the identification sheet in this working paper. You'll see it here on the left-hand side. It's the first sheet. And then you need to identify which estimates are applicable. Step 2 is now then for each of those estimates, you're going to populate an estimates program. So it looks like, an audit program. It's going to take you through the risk of material misstatement. It's going to help you execute the procedures, and it's going to assist you to do an overall evaluation. So all of your work for a single estimate will be in one pretty working paper, summarized and easy to review for the partner. Then we have the, this one here. This will be our final estimate summary. So this is just where all the information pertaining to the estimate will be summarized in the finalization section. Okay, so this is just in a nutshell what our new RAC process entails pertaining to estimates. Okay, so let's see. The identification sheet. Now you all know your lovely client, and before starting all the legwork, you know that there are certain estimates involved. So you need to now go through our list and indicate which of these estimates are actually applicable to your client and applicable to your audit. Please note that this list is not exhaustive. So we only took what we had before in the 10.20, the estimates we've identified there, and some new general estimates that some of the experts we used gave us, and we combined it into a pretty list for you just to start you off with the estimates process. Okay, you'll also see that these cells are green bluish. Leon says it's blue. On my screen it looks green, so please mind me, it's greenish blue. Okay. So these cells are like that because it's manual input. You can change it. Okay, so if you don't like the way that we set and explain the estimate, you can change it. And please note that this will be the name of your working paper. Okay, whoops. Cool. So I just want to show you how the estimates population work, and then we're going to move on to the 3 examples that Darina showed us in her Wednesday webinar. Okay, so let's say we have those 3 estimates that is applicable to my client, and we do have PPE. So of course I do have useful life, and I have residual values, and also there were some impairment involved in my property, plant and equipment. Cool. I don't have fair valuation because my client is using the cost model. Okay, so just for ease of reference, these are the estimates applicable to my client. Okay, happiness. You'll see in this column here, there are no references generated for you. These references are just so that Draftworx knows where to put the estimates to be audited in the correct section of the audit. Okay, so you'll see revenue needs to be included in section 35 because I've selected on 10.15. Let me just show you. On 10.15, I've selected I want to audit full business cycles. Okay, so now Draftworx knows that any estimates relating to revenue, the estimate programs needs to be included in my section 35. Okay, if you select to have a combined, summarized approach, so that you don't have the full business cycle, you'll see all of the estimate programs will be included in section 30. Okay, so that is just so that you know where the references come from. Cool. So I'm happy with these. You'll see it is quite an extensive list. And also we do have some additional components here at the bottom. So if you're not comfortable with using one that we have, you can make your own. And I'm going to show you how, because the 3 examples Tarina had actually isn't listed in our set estimates here. Okay. So my estimates are selected. I'm happy. Then we've included this sheet for you called the General Information Sheet. This is crucial information that you need to document for your estimate. The good thing about this set of information is it's very general, okay? So who is involved in making the estimates in your client, the management, the personnel, the people. So who makes them, who approves them, who reviews it, what's the process, what's the inputs used, what's their methodology behind risk assessment of the estimates. So it's something that's very general. So what we did here is you have now the ability to document it once, and then after you've populated your estimate programs, these questions will already be answered in those individual programs. Okay. At any stage, it can be changed and repopulated to update the information. Okay. So I'm going to show you. I've also made some changes to these in our examples, the 3 examples from Tarina, just to show you where everything pulls through. Okay. Now I've done my planning. I'm at this stage now where I can actually populate my audit programs. So my planning is done. I've identified my risks. I have an audit plan. I know what I want to do. Okay. So before I send in my team to be fed to the wolves, I can now populate my estimate working papers together with my audit programs. So I don't know if some of you have already seen this, but I just want to, sorry, where's my arrow to minimize this thing? Oh, sorry, I'm just going to do that. My arrow is gone. You'll see here that we do have now 2 sets of populating actions. So first, the working paper program that you're all familiar and comfortable with at this stage, I hope. And then we have our populate estimate. It works on the same basis. The similar things need to be completed for us to populate estimate programs than should have been completed to populate working paper programs. So we will be able at this stage now to populate. So I'm going to press the button, and then you can see here on the left-hand side, we have our estimate working papers being populated for us. Cool. Just going to close this a little bit. Okay, so for section 30, you'll remember that I had PPE, my client has PPE, and I've identified that there are useful lives involved, there are residual values involved, and there are impairment involved. Those 3 estimates are involved in my PPE balance on my statement of financial position. And then I've also identified the 3 estimates pertaining to revenue. Okay, so there's the estimate working papers. I'm not going to open it here. I'll open it in our example sheet. Then I can work with you through what this process entails, what this working paper program entails. Okay, so to get it to populate, it's quite easy. You're all familiar with what needs to be done to populate our audit working papers. It's just now we have like a new phase. Okay, everybody happy with that? Please ask questions. You can at any stage just send a question in the question and answer box. Okay, this is now.
I want to just quickly, sorry, Janita, I just want to quickly make a couple of points based on a few questions that have come in already. This, what we're showing you, although Janita is showing it to you in our RAC methodology, every single one of these working papers is also applicable in Audit Light Plus. So all of the new working papers we developed for RAC, we have also included the exact same ones in Audit Light Plus. So if you're not using RAC, please don't think that this training is not applicable to you. You will see exactly the same process unfolding in Audit Light Plus. So please just be aware of that. And also, just one thing I'd like to add, just on 12.80, where we're recognizing those estimates, I think if any of you have had training from me in the last few years on RAC, I've often emphasized this point about estimates being, look, we've got to consider if there is the possibility of an estimate. But what we are focusing now more with the new working papers is which estimates actually existed, which estimates has management actually made. And so you'll see that question at the top of 12.80. It's a very important change that's happened, because instead of saying just which could be applicable, we're saying which estimates are applicable, because the next steps that we need to go through is all around assessing that estimate that was made. So the focus has shifted slightly. So we're no longer looking for anything we can find. We're really just looking for estimates that were actually made in the engagement. So I just hope that just also adds a little bit more info for those who are attending the training. Thanks for letting me butt in. I'll let you continue.
That is now what experience brings you. Thank you so much. Okay, so this file I've created now is I've actually used Sarina's example. If you can pull them up on your screen if you downloaded this slide. We're not going to go through in much detail, but just so that you can, at the end of the session, have peace of mind that you know what you're getting yourself into, and that you know step by step what to complete, what needs to be done, perhaps have a feel of what questions you need to ask, and also how you need to prepare your team for auditing these these estimates. Okay. So based on that, now I just want to show you that I've identified, based on those 3 examples, I've identified 3 estimates that are indeed applicable, like Leon said. Not could be, that are indeed applicable. Okay. So first of all, our first example was the cupcake example. I don't know if you can recall everything that happened there. So basically, they had an estimate in determining the coupon usage percentage. Okay, so that is my name for my estimate. The estimate involved in determining the coupon usage percentage. Now, as you can see, the name here, that'll be the name of my working paper. So whatever name you give it here, please note that that will be the name of the working paper, so that you don't go and unnecessarily spend time in searching for something. Okay, so yes, it's applicable to revenue, and then Draftworx generates a reference, a working paper number for me. Our second one was the gift cards for A to Z clothing. They actually had an estimate involved in determining the percentage of the value of gift cards that expired. Okay. Third one was Web Solutions, where they had an estimate involved in determining the rebate percentage. Okay. If those 3 doesn't ring a bell, our slides are up and the YouTube videos are loaded for the webinars on Monday and Wednesday. So please take the time and go listen to Sarina. It was really informative and she broke it down. It's now easy. So no need to figure it out by yourself. It really helped a lot in understanding what needs to be done. Okay. So based on that, I have my 3 estimate working papers populated for me. 1, 2, 3. We are quickly going to run through what these working papers entail, what the objective, the scope, and the outcome of it will be. Okay. So this is first, just taking you back to the guidance to show you where we are at. So now we have identified it, we have populated my program, and now I'm at the steps included within this working paper program. So step 1 was to identify. We already did that. Step 2 will be now to obtain an understanding of what this estimate entails, what it affects, how it was made, what inputs did it involve, what data sources did it involve, and ultimately how management came to say, okay, this is my estimate, this is the value linking to the estimate, and that's what we're going to incorporate into our financial statement. We also guide you in assisting to assess the risk of material misstatement. That is step 3. And then we have our response to the risk of material misstatement. So you know from ISA 540, there's 3 responses. You can use 1 in singular, so only approach A, or you can combine them, just whatever fits the estimate to be audited and to provide you with sufficient and appropriate audit evidence. That's the approach you're going to follow. We also have then the overall evaluation to say, okay, I'm comfortable that this estimate is reasonable or not. Okay, so this is where we are at now in our ISO 514 process. So step 2. Step 2 is now obtaining an understanding. So I'm going to try to link the paragraphs in ISO 514 with what we did in our RAC working papers, just so that you can make that link. It's easier then to just understand the bigger picture of what we are doing and where we are going with this working paper. So step 2, obtaining an understanding of the estimate. We have here the entity and its environment as 2.1. This is now where you need to evaluate the estimate against the requirements of the accounting framework. I think it's a good place to start off, because once you know what the accounting framework requires, then you'll be able to say, okay, listen, but this estimate is completely not within compliance with IFRS or IFRS SME, whatever you're using, or yes, it is, we can continue. Okay, so 2.1 will be what the accounting framework actually requires, what management did, can the two be linked to each other, is it reasonable based on this stance, and then you can continue. Okay, so we try to document a few considerations for you to assist you in actually making a decision and guiding you through it. Okay, 2.2 is where we get into a little bit more detail. So this is actually where we are going to do a walkthrough and where we are going to look at the entity's control, specifically now for estimate. Okay, so please bear that in mind as well. The evaluation of controls and the walkthrough and what we are doing here, the questions we are asking, the observation and inspection that we are doing at this stage is only pertaining to the estimate you've identified. You're not going to do your additions and disposals and whatever control testing here. This is just pertaining to the estimate. Okay. So like I promised you, all the information that we've documented on 12.80 gets pulled in for you into your audit program. I'll quickly show you what I have documented here so that you can see. From these examples that Tarina gave us, we only identified 2 persons involved in determining estimates. That was a management, I couldn't get a better name. And then we know for Web Solutions, they've actually used an IT specialist. Okay, and then you need to fill in their experience and skills and designations and qualifications. Okay, and then we didn't have enough information from the examples to actually complete all of these questions. But if you do have from your client, I really hope you do. Otherwise, there should be some red flags going up. But you can document the rest of the information here to be pulled into your your estimates program. Okay. So you'll see 2.2.1 to 2.2.4 will pull in from 12.80, and then again 2.2.10 to 2.2.14 is also very general, very entity specific. So it's easy to fill in once in 12.80 and automatically let it pull into our estimates working papers. Okay, so I want to bring you to these questions here, because these are now crucial questions which are estimate specific. So first of all, and this is now for our cupcake example, you'll remember from the cupcake example, they didn't use an external expert. So management didn't use an external expert. Okay, so I said here, no, not used. And then you just need to document your understanding of what management actually used to make this estimate. And I've just extracted that from the example. Okay, and then what was the data inputs they used and what was the source of the data. So very easy. Those were all pulled in from Tarina's examples. Okay. Then we get into a little bit more detail. You'll remember now that paragraph 16 in ISO 540 actually requires us to do a retrospective review. So question 15 is where we assist you in providing you some template in order to actually do that retrospective review. Please note that you can, if it's a lot of information, this is a big estimate, this is a material estimate, you can do a separate working paper and rather just link it in here. If the space we have provided you is not sufficient, please do a separate working paper and rather just linking it in, because otherwise you're just going to clog this working paper and then it's going to become unusable for you because you're going to have information dumps. The partner is going to end up taking 3 to 5 hours just reviewing one estimates working paper. So whatever you need to determine what's your way of addressing these estimates, of doing the field work, and then get a nice process going for yourself. And then you'll be able to say, okay, now I'm just going to document in here, especially our smaller clients, the IFRS SME audits. I think these space we've provided here is sufficient. But for the bigger companies, it might be a little bit too little. Okay. Then we need to determine, then we document our actual outcome for the re-estimation, and we're going to, based on comparison with the previous year, we're actually going to say, okay, this is still fine, or no, or rather consider some additional information, etc., etc. Okay. You will all remember this section, indicators of management bias. So remember in 12.70 where we had that it was step A. So this is now where we've incorporated that section of 12.70 into our estimates process. Okay, auditing of estimates process. Okay. And then here's just a little bit of considerations, how to communicate with management. Then we have a little conclusion here, just to ensure that you know you are happy. So was the identification process properly documented? Because it's one thing to do the identification process and know all of these things, but was it properly documented? Please remember ISO 230 as well, sufficient and appropriate audit evidence. And something that the partners usually love to say, if it's not documented, not done. Step 3. Step 3 is now where we need to assess the risk of material misstatement. This is quite difficult when you read it in ISO 540. So ISO 540 paragraph 16 actually says the following. Identify and assess the risk of material misstatement relating to an accounting estimate and related disclosures at a decision level. Separately assess the inherent and control risk and take into account the degree to which the accounting estimate is subject to or affected by estimation uncertainty, complexity, subjectivity, and other inherent risk factors. Now, if you give that to a trainee to read, they're just going to be like, what happened? And what is this paragraph actually asking me to do? So what we've tried to do here is build in some considerations for you to assist you in, okay, what does degree of estimation uncertainty mean? What does complexity mean in this case? What does subjectivity mean? And what are the other inherent risk factors that we actually need to consider and take into account when determining the risk of material misstatement? Okay, so very easy. First of all, you're going to need to document what's the significance, the magnitude of this risk, of this estimate, sorry. Then you're going to have to document the degree of estimation uncertainty. Okay. So to enable you to make a proper consideration or a proper evaluation, we have documented some considerations for you. So you'll see it's quite a long list that you need to go through and say, okay, yes, this is applicable to my entity, or no, it's not. And then ultimately you need to conclude that what do you think the degree of estimation uncertainty is? I know ISO 540 involves a lot of judgment, professional judgment. It's actually all that you have to work with is your professional judgment on what you think this estimate is doing, is what's the outcome, is it reasonable, is it allowed? It's quite difficult to audit estimates, I think. Okay, so for our cupcake example, we have assessed the degree of estimation uncertainty as medium. Okay. Next up, paragraph 16 requires us to assess the degree of subjectivity and complexity. Again, our considerations to assist you to say, okay, this is now, have I assessed the complexity and subjectivity of this estimate? Yes, that's fine. Other inherent risk factors, here's a consideration point for you. And what does that entail? And is it applicable to my estimate or not? And then we have here our likelihood of misstatement. So based on the questions answered above, we built in a matrix to enable Draftworx to spit out in inverted commas a likelihood of misstatement for you. Okay. So based on that, you'll see there's a formula and it's also a gray cell, it's a locked cell. This is driven by the questions you've answered at the top. So all your considerations now are pulled into one simple answer. What is the likelihood of this misstatement occurring? And for our intents and purposes now, it's almost certain. Okay. And then based on that now, what is the final risk of material misstatement pertaining to this pertaining to this estimate? Okay, so now it's significant. Cool. If it's significant, we are going to open up some additional procedures for you, which involve some control testing. So you need to now say, okay, are there mitigating controls relevant to this significant risk? If yes, what are you going to do about it? Perform a walkthrough, test it. You need to document your audit approach then if there are mitigating controls. In some instances, there are not mitigating controls. You'll remember from our cupcake example, sorry, I'm just opening it up on this side. From our cupcake example, they said that the company has basic controls in place over the revenue, but none of these controls address the estimates made in determining the transaction prices in terms of IFRS 15. So yes, there are controls over revenue, but none of these controls will actually mitigate my significant risk. So even though these procedures will now become not applicable, you have documented that you did ask the question, there aren't any mitigating controls. Okay. Then you'll just have to document everything. And now you have a properly documented risk of material mistakes. Okay, but it doesn't end there. Now, based on that, so we've said now, this estimate has a significant risk, okay, pertaining to it. So now I need to decide what am I going to do? Which approach am I going to follow? Am I going to use a combination of approaches? What's going to fit my client the best and enable me to obtain sufficient and appropriate evidence to base an opinion on? Okay, cool. So for Cupcake, I just want to take you through the three approaches quickly just to refresh your memory. So approach A is where you can obtain audit evidence between year end and the date of signature of audit report to actually substantiate what that estimate entails. Okay. Approach B was where management had calculations and models. So you can just ask them about it, obtain it, perhaps do a recalc of it, assess the reasonableness of the recalculation or model, etc. And approach C is where you actually had to develop a point estimate and then take your point estimate made, match it to what management has, and then determine whether this estimate is reasonable or not. Okay, so those are the three approaches. Like I said, usually you are going to use a combination of it because it's not as easy as just saying, okay, do one or the other. Cool. So from our cupcake example, you'll see here that yes, we can use approach A because they said here, sorry, I just want to get that. So they use past sale figures as their data inputs, as their sources, and then they actually develop this estimate and then they base it on a gut feel. Okay, so you can use past evidence from events occurring up to the date of the auditor's report. So I almost said subsequent events. Okay, so you can use information gathered between year end and the date of the auditor's report to actually determine whether this estimate is reasonable or not. They didn't have any models. They said it was based on gut feel. So that is something that we can't actually test. You can't test someone's gut feel. So approach B will definitely be not applicable for us. So you'll see here, approach B, I said no, we're not going to do that. Approach C, on the other hand, yes, I, as auditor, I will be able to develop a point estimate. It's not that difficult. I can use past sale trends. I can see what the estimate, retrospective review of the estimate, what happened to this estimate over the past 5 years or 10 years or whatever, develop my own estimate of it, and match it to what management has. So that's quite an easy approach to do. Okay, so for this, you'll see now that we are going to use a combined approach between A and C. Okay, I hope this makes sense. As a conclusion, you just need to confirm that the procedures were successfully carried out. This is now after the fieldwork is done. Okay, so if all of these procedures are done and executed, what was the result? Okay, was it successfully carried out? Yes or no? Are you going to do what's the effect on the audit opinion? You know, all of those evaluations. Now it gives rise to new work and new working papers. We did also provide you here with the ability to hide the not applicable procedures, just so that your working program doesn't get messy. Okay, so only for the ones that you are going to do, it's going to be unhidden and you'll be able to execute it. Okay. Step 5 is where you now need to tie all of the strings together and you need to do an overall evaluation. Now I did my identification, I did my understanding. I hope you understand it by this stage. Then you did your assessing the ROM, and now you actually developed your response, you've executed the response, you made a decision or you concluded that yes, it is fine or no, it's not. Now you just need to tie everything together. Okay. So here it's just, I think it's 6 procedures, where you just need to now document your conclusion pertaining to this estimate. Not difficult. This step is actually the nicest one of all of them. Okay. Then we have something here we've actually built in just to show the auditor, just so that the auditor can develop a feel of what the estimates are doing. Okay. So please note, I just want to bring your attention to the fact and emphasize the fact that this is not a numeric calculation. Okay. This is what the effect on the overall financial statements are, and then it's basically on this estimate, is it going to increase and decrease asset, or does asset remain unchanged? What's going to be the effect on liabilities? What's going to be the effect on equity? Okay, so it's just as simple as saying yes, it increased or it decreased or it remained unchanged. No numerical calculation, no materiality involved, figures involved, values involved. This is just so that the moment you see, okay, my client has 7 estimates. I've identified 7 estimates. All of these estimates result in an increase in assets. Now you need to sit back and think, oh, shucks, but are they actually overstating assets now? Does it give lead to some more thorough investigation required? And then you can take it from there. So it's just so that the auditor sees, okay, if all of the estimates are tied now together, what is the effect on the financial statement? And I'll show you where that is summarized in the finalization section. Okay. So my assets in this case remained unchanged, my liabilities were unchanged, and my equity decreased. Okay. Then we have just the final set of conclusions. These are the important conclusions. Please ensure that you document this correctly and that you understand what you are documenting here. Okay, so I'm going to take you through all of them now, and then the rest is going to be a little bit easier. So A says, these procedures were customized to understand the estimate, assess the risk of material misstatement, respond to it, and evaluate. So have you customized it to make it applicable to your entity? Yes. Now, have any estimates been identified which were made by management but not correctly documented on 12.18? So let's say through execution of your work, you actually saw, listen, but this estimate consists of 2 separate other estimates. Or you've identified an estimate that you didn't know of at the stage where you were doing your planning. Okay, you can say, yes, I actually did. Then you just need to go back to 1280, document it, repopulate it, and then you'll have an estimates program to test it. So it's easy and simple as that. Okay, for now, I'm going to say no, we have identified everything. Then, did the auditor identify areas where management should have raised an estimate, due to statutory or financial reporting standards, but has not done so. So you know depreciation needs to involve useful life, but they didn't assess it. Okay, this is now where you need to decide, was it crucial, yes or no, and what are you going to do about it? So if yes, please insert an additional working paper to document the identification, understanding, assessing of ROM and the evaluation thereof. Okay, let's hope that is not the case and it's a simple no. Cool. And then also have the ability to hide any not applicable procedures, review a sign off, and then obviously were there instances of fraud identified. Estimates, especially based on gut feel, you need to really be waiting for fraud. Okay. I hope this makes sense. The second and third example that Tarina did, I'm not going to go through it in as much detail. I just want to show you how the overall assessment, especially on the three items, assets, liabilities, and equity, how that can now change your mind and saying, okay, no, wait, I need to do more work, or okay, I'm happy, I know that was the effect. Okay, cool. The second example, if you remember from Wednesday, that was the example related to A to Z clothing. Okay, that was the easiest one, I think, from the lot. So again, here remember the pull through from our 12.80, that was quite fine. Management did not make use of an external expert, so that was also easy. And they had documented calculations and models. So they had a process and it was easy, and you can redo the process and recalculate and get to an answer and say, okay, but you made a numeric error, a calculation error or not, whatever the case may be. This is, I think, the best estimate to have. If you have something that there's a policy for, there's a calculation for, there's a model for, you just can evaluate that and decide, okay, yes, it's reasonable or not. Cool. So there I documented my understanding of the data and inputs, the source of the data, the method and model used. Everything quite easy. I did a retrospective review of my estimate. That was also fine. I did document the actual outcome or re-estimation from the prior year and compare it also to the prior year, and that was my result. Okay, so that's quite easy. Step 3, where we now need to document based on paragraph 16 of ISO 540, resulted in the significance as being assessed as medium. My degree of estimation uncertainty was assessed as low, because now the uncertainty, it gets lower because there's a model and there's a calculation. Okay. And then we did the evaluation of degree of complexity and subjectivity. That was also easy because if it's a documented process and the model gets done year after year after year, it does give rise so that complexity can be lowered. Okay, so the level of risk, the likelihood of it being misstated, in this case was selected as medium. Okay, so based on your consideration and everything you've documented, it resulted in having a medium likelihood of misstatement. And the risk, the overall ROM, the final risk of material misstatement in this case has been assessed as low. Okay, you'll see because it's low, there were no need to document any controls mitigating the significant risk, assisting in mitigating the significant risk. It's low, you can move forward. Okay. Then based on our approaches, we do have access to evidence between year end and the date of signature of audit report to assist us. They can provide us with their calculations during the audit and we can recalc. So approach A, yes, we can do that. Approach B, yes, they do have calculations and models. It's going to be a good audit of the estimate. And approach C, do you actually need to have a point estimate now? It depends. You can apply your professional judgment, but because the estimate is at the end in this example based on actual, there's no need for you to develop a point estimate. So for this example, we used a combination of approach A and approach B. Okay. And again, did all my procedures, and I can hide all my not applicable procedures just to clean up my estimates working paper. Conclusion, these conclusions, you'll see there's not a lot of steps that you can actually say, no, it's not required to be done. Okay. Again, our tool just to assess the audit partner is in this scenario now, my assets remained unchanged, my liabilities decreased, and my equity increased. And then based on that, you'll see now where it's summarized in the finalization section. Okay, cool. And then I'm just going to say here, and my reviewer sign off, and no, I haven't identified any fraud. So our third example was, I think, the difficult one of the lot. So they have indeed used an expert here. Remember, that was the Web Solutions one where they had an IT expert. So now you need to remember that you're actually going to involve the evaluation of, are you going to use management's expert? Are you going to appoint your own expert? What are you going to do about it? So that's actually quite a little bit more detailed and difficult to audit and say it's as easy as just doing a recalc. Okay, so based on this, it was a little bit different. Yes, they are using an expert, and now you need to document your understanding of why, because if you recall, it's quite a difficult example. It was quite a difficult estimate. I can quickly read just to refresh your memory. Sorry, I just want to find the exact sentence. Oh, here it is. The estimate of the rebate percentage is determined based on a complex method. So complex method involving estimated revenue, expected stability of the system, expected technological challenges, estimated service levels, and system breakdowns, to name a few. So that was quite difficult. I don't think your team has the skills to audit this to provide you with sufficient and appropriate audit evidence. So you may need to consider involving your own expert, okay, which gives rise to additional working paper and everything. You need to document to show over that you have considered everything. Okay. So step 3 here, the significance was assessed as high. Remember, this is quite a difficult estimate. If you don't have a lot of experience in the bandwidth and service provider, internet service provider industry, it is going to be a little bit difficult to audit those estimates. Okay, so the degree of estimation uncertainty you'll see here, we assessed as medium. We reassessed as medium. The degree of complexity we've assessed, and then we have our other inherent risk factors, which there weren't any. Likelihood, almost certain of happening. We, based on the considerations and based on the questions you've answered, actually determined that this is a moderate level of risk. That's my final ROM, because you can get an expert, you can develop a point estimate, and you can actually get enough information if you appoint someone with the necessary skill to assist you in getting sufficient and appropriate audit evidence. Okay. Step 4, you'll see here, due to the complexity of this estimate, you can actually use all 3 approaches to enable you to have sufficient and appropriate audit evidence. So yes, I have access and I can obtain audit evidence from here into my audit report. There is calculations and models involved. I just not necessarily know how to read it, but I can also get my own expert to assist me in evaluating it. And then, of course, I can get my own expert to develop a point estimate, match my estimate against what management has, and then we can take it from there, depending on the results of your field work. Okay, so everything easy about that. Conclusion again. Then we have here what happened to my financial statements. For this estimate, the assets decreased, the liabilities remained unchanged, and my equity also decreased. Okay, so my procedures were customized. I haven't identified any other estimates, and no instances of fraud were identified. Cool. Now you have audited your estimate, and hopefully you had good results from it, and it was carried out successfully. Minimal changes in audit approach and minimal headbutts with the client. And now everything gets summarized for you in finalization. So you'll see this is also a new working paper we've included in our RAC and audit life methodologies. This is where everything gets summarized to give the auditor a bird's eye view, a bigger picture of what estimates actually did to our financial statement. Okay, all these cells here, they are pulled through from our estimates audit programs, our estimates program. So you'll see, was the identification process properly documented? Yes. What was the significance? What was the degree of estimation uncertainty, complexity, all of those things. Have you done some control testing? What was the results thereof, etc. Okay, so that's just a summary of what happened in your individual estimates program. Here is just some procedures on written representations and communications with management to ensure you've covered all your bases. Okay, and then here in our and then you just have an overall conclusion. Easy. Was everything sufficiently carried out, successfully carried out, and the partner sign off. In the overall evaluation, this is now where all of those decreased, increased, and unchanged evaluations gets pulled together so that you can see what the overall impact of estimates are on our financial statements. Okay, so for the first one, remember we said it only affected equity, second one affected liabilities and equity, and third one affected assets and equity. Okay, this gets pulled also from our estimates program. Based on that, this little table just counts it, as easy as that. So how many increases were there in assets? None. How many decreases were there? One. How many unchanged were there? Two. Okay, so as easy as that. And then based on that calculation, it just gives you, okay, so the overall average impact on assets it remained unchanged. The overall impact on liabilities it remained unchanged. And the overall impact on equity, it decreased. So from this point, the auditor can now say, okay, if all of the estimates involved decreasing my liabilities, I may need to do a more thorough investigation. If all of my estimates increased revenue, I might need to consider doing some additional work. There may be management bias involved. Okay, so this is just to enable the auditor to look at a bird's eye view from a broader spectrum at what estimate did to the financial statements, and then ultimately he or she can decide, okay, perhaps I need to do a more thorough investigation, or I'm still happy, I have done all my work on the estimates, I was happy, it was reasonable, there were calculations and models, the recalcs went good, so I'm happy that the overall effect on revenue or on equity was increased, for example. Okay. And then just based on that, doing an overall conclusion on your estimates auditing work. And that is our new estimates process in RAC and Audit Life. So we really tried to make it as easy as possible. Something I can also show you, if you feel you get stuck somewhere, we did try, you'll see on the upmost right hand side, there's a column, a guidance column. If you click on it, it'll take you to the guidance sheet, the paragraph in explaining why that procedure was inserted in the estimates program. Perhaps it'll shine a little bit more light on what our method behind the madness was in interpreting what ISO 540 requires and how easy it can be executed in practice. Okay. Now for questions. Oh, there we go. Leon, is there something you would like to add?
Yeah, no, I'm also just looking. Not any new questions coming up. So from my side, I don't think there's anything more I'd like to add at this stage. But folks, I think what we do want to ask for though is feedback.
Yes.
Obviously we've engaged with external experts. We've built the working papers. We've got Tarina in to come and give that training to us. well, to all of you as well, just so that everybody is aware of what's going on in ISO 540. But at the end of the day, Janita and I are not the ones doing the physical audits. And if there are things we can do, add, change, edit, that'll make life a little bit easier. I think we've said it many, many times. What Draftworx is today is because of feedback. So we do just want to encourage any feedback related to the working papers and the processes. We'd love to hear from you about that. And then, yeah, thanks, Janita. Don't see any more questions coming up, so I think we can pretty much close down. We will put the recording up, uh, probably even this evening, but we'll send the link out early next week, and then we'll start processing all the certificates, and we will also send an email just with the slides, so that if you don't get it from YouTube, you can also have a copy of the slides from the first 2 sessions available as well.
Cool. Thank you so much for listening to me, taking the time to listen to me on a Friday afternoon. I know you had a busy week in getting introduced to ISO 540, and we really do appreciate it. And please send us those feedbacks. We will do anything to make your life easier, especially with the changes made to the standards. So please, if there's something, like Leon said, we are here to help you. Thank you so much, and you guys must enjoy your weekend. Stay safe and keep well.
Thanks. I see there are 2 folk that have got their hands raised. I don't know if you guys are trying to ask a question, but if you're wanting to ask a question, maybe just pop something in the Q&A. If you move your mouse to the bottom of the screen, you should be able to see the little Q&A come up. So we'll give a couple of more moments. Yeah, I see now a few more people putting their hands up and down. I don't know if you're waving or wanting to ask a question. If there's a question, please shout. Otherwise, we'll just wave back. Okay, that looks great. Thanks, folks. If there are any more questions, please just pop us an email, and we'll be able to reply there. Thanks very much. Have a fantastic afternoon further. Cheers, everyone.
Bye, guys. Have a lovely weekend and afternoon, and hopefully we'll hear from you soon. Bye.